Hollen from Maryland is recognized.
Thank you, Mr. Chairman. And I do hope we'll vote on the Federal Reserve nominees. Vote yes, vote no, but let's vote on all of them. We passed the American Rescue Plan just about a year ago because the pandemic had hit our economy hard. It had hit workers hard. Millions of Americans were out of work. And as you've testified today and as the facts show, and I think those facts are uncontested, we've seen jobs come roaring back, over 6.6 million jobs, a record in the United States. We've seen very robust real GDP growth of 5.7% in 2021. Now, one of the reasons we passed the American Rescue Plan was because families' incomes were being squeezed when they were out of work. That included the $1,400 individual payments. Did it not, Dr. Rouse?
Yes, it did.
And I keep hearing from our colleagues about how the real purchasing power of American families went down in 2021. It did not. Isn't it the case that real disposable income grew in 2021?
Well, so again, I will just refer to our chart here, which is some new evidence from economists at UC Berkeley, and which suggests that, especially for the bottom 50%, that if you look at their market wages before tax and before benefits, that they're better off today than in the last quarter of 2019. And then when you add in benefits and after taxes, they are ahead. So we know that inflation is a challenge, but household balance sheets have
well. So look, if I'm a household, and what I look at is what is my purchasing power this year over last year, and isn't it a fact that real purchasing power went up in 2021?
It did. So these data suggest it did for most families. But we have to acknowledge that inflation has also been a challenge and has eaten into some of that purchasing power. But because due to the record GDP growth, there has been a very strong recovery so that household balance sheets are strong and many Americans are better off today than they were at the beginning of the year.
All right. And so, you know, as I look at that, when you factor in the individual payments from the American Rescue Plan, when you factor in the other relief, you know, taken together with people's wages, the data indicate that we've seen a growth in disposable after-tax income, and especially so for lower wage individuals. Let's get to where we are now, because you know, there's been a lot of year-over-year comparison with respect to real wages, and I think, Dr. Bernstein, I think I heard you clarifying something that had been said earlier. But if you look at January's figures with respect to real wages, what do we see?
I will tell you what we see, but I'll also give you the beloved CEA caveat, which is that we never read too much into any one month. We're always looking for trends. However, we also look closely at the jobs report, and it did show in January that the hourly wage beat the pace of inflation. I think the hourly wage was up, if I'm remembering correctly, 0.7%. Inflation was up 0.6%. Now, that's 1 month. But it is indicative of trends that you've heard about from all of us here today. The strength of the job market, that was a month where we had an upside surprise in job gains of 467,000 jobs, well above what was expected, and a job market that was powering through Omicron that was very much upon the land that month. We should also underscore what Chair Rouse was just talking about, that when the job market tightens up as much as it has, bargaining power, leverage among working people goes up disproportionately for those in the bottom half. And that's one of the factors that's behind the stronger wage growth in the bottom half and what you see there vis-a-vis market incomes and disposable incomes.
So really quickly, if we're successful at beating this pandemic more and more, it does look like Omicron is on the downward trend, although you never know what will happen. But one of the issues we've seen, of course, is during the pandemic, people purchased a lot more goods relative to what they purchased in services. In other words, that balance changed. Can we expect that as people, get back out and can go to restaurants and movies, that pressure, that price pressure on goods will come down, and how would that impact inflation potentially?
That is certainly the dominant expectation, and it's one of the main reasons why forecasts for inflation predict that inflation will grow half as fast at the end of this year than it did last year. That goods-service rebalancing helps in that regard because inflation in the goods sector, due to the dynamic that you're describing, has vastly surpassed that in the service sector. But we'll have to see. And look, forecasts have been wrong. And I think the thing that we're trying to stress here today, that both in terms of our administration's actions, in terms of strengthening supply chains in the near term, our work in the ports, our work with the trucks, and our legislative agenda, including the bipartisan infrastructure law and many of the productive capacity enhancing measures in the Building Back Better agenda, are extremely important to ease longer-term inflationary pressures.
Thank you. Thank you all.